We're going to run through the markets. We're going to talk about what's happening over in the futures market, crypto, Forex, and then we'll let you guys get on with your way. We have been talking about breakouts this week, so the week has been focused on breakout trading, and we're going to just do one more quick lesson on that. Today is going to be the last day that I'm doing the live stream for the next week. So tomorrow through next week, I'm not going to be looking at charts. I might pop in here and there and do just a quick live stream just to say hi and touch base with you guys. But it's spring break for my son, and we're getting an early jump on spring break. Although I don't know that we need to now. All the flights have opened up because of the coronavirus fears. People are losing their damn minds over this. Irrational thought is out the window. It's going to have a crazy impact on the markets, and the markets have rallied a little bit this week, but I don't know how much that's going to be sustained. And I know this is what I always talk about. Don't form a bias, just trade what's on your charts. But it's hard to not form a bias. It's hard to not form a bias when you just see it coming. It is right in our face. There's some, unless people wake the heck up and start acting normal again, there's some bad stuff coming. Anyway. We're not here to talk about that, though. We're here to talk about what is going on. So what I'm going to do is I'm going to real quickly run through the levels over here. We'll talk about the levels on futures. We'll pop over, talk about what currencies are moving in Forex, look and see if there's a breakout trade that we can do in Forex at a specific time that we can take advantage of and why. Then I'll pop over to have a look at one of our advanced breakout tools and apply that to a trade here in the market. We did one on Tuesday. Yeah, we did one on Tuesday. We did one yesterday. Trades they do exactly what they're supposed to do. Again, not every trade is going to be a winner. I want to reiterate that, but it does give you, as long as you've got something that you can apply consistently with good expectancy behind it, you're going to be fine. You can almost flip a coin and be fine. So, with that said, let's jump in, and I'm going to put you over here to this screen, and we'll just have a quick look at what's going on across the board here. Starting with E-minis, yesterday was an uptrend. 4 hours, still a downtrend. We are still technically in an upward trend until this next bar opens, but right now my moving averages that I use, and I use moving averages as just a trend identifier. I don't use like a moving average cross trading system or anything of that nature. I keep moving averages on here because I think it's a good, and again, this is personal opinion. Everyone's got their own opinion around it, but I feel like it's a good look at the market in order to determine market direction. So I have a weighted moving average here that is this shorter term. And then I've got a longer term moving average down here, which is a 100, which is my longer term. And if my if my short term is above my long term, we're in an upward trend. And if my short term is below my long term, then we're in a downward trend. And it's as simple as that for me to identify what we're looking at from a trend perspective. Now, obviously, if you go to different time frames, you're going to see different trends. And that's something, just an important consideration when you're thinking through your trading plan. How do you want to trade? And I've talked about this in previous lessons. Do you only trade when your short-term trend is in alignment with your long-term trend? And 4 hour isn't necessarily a long-term trend, but it's a I feel like it's just a good balance between going out into the dailies and weeklies, and a good balance between that and the really short time frame. So for me, this works out. So I look at the 4 hour. My 4 hour trend is down, and you can say, and you have to really think through what you want your plan to be. You really have to give it some good consideration. But you can say, hey, if my short-term trend, if my 30-minute trend is opposite of my long-term trend, I don't want to trade. I'm not going to take any trades. I'm not going to trade until these things are in alignment. And that's fine. That's totally fine. It's just an added filter. And anytime you add a filter to anything in trading, you're going to take fewer trades. Nothing wrong with that. History has shown us that the more patient we are and the fewer trades we take, generally the better off we're going to be. I know for myself personally, whenever I start taking high volumes of trades, I'm typically doing it out of some psychological reason, not because there's something truly quantifiable on the charts. Typically, whenever I look back at days where I've just gone off the rails, it's because you start revenge trading, or you have this fear of missing out, or you have the need to get it back, or whatever it might be. So history has shown us that if we're patient, take that zen of trading, right? Just be patient. Take a deep breath. Sip of coffee. Make sure that what you're doing is within alignment of your process. Yeah, when we do those things, we trade better, and we have better results. So, again, I'm not telling you that you have to trade any certain way. I just want you to think through certain considerations. Certainly nothing wrong ever with trading against the trend. Just always have a stop loss. Be prepared to be wrong. Don't get too tied to what's going on there. Have a reason for why you're trading against the trend, and make sure it's something that's quantifiable and repeatable. So anyway, that was probably a longer soapbox time than I needed to have, but I think it's good information to put out there. So it's good information for you guys to hear, maybe reiterate for you. So anyway, all that, and I haven't even talked about what's going on with the E-minis. So over here at the S&P, where we've been in a bit of a downward trend really since the off hours trading session started. We hit a key level up here, same exact level we hit on Wednesday. No, today's Thursday. On Tuesday, man, my days are running together. Because I'm leaving early tomorrow, today feels like Friday to me. So anyway, on Tuesday, we had news, right? It pushed us up as that Fed announcement came in, pushed us right to a key level, repelled off of it, pushed back. Yesterday, the market struggled, pushed, came to that exact key level and repelled off of it. And then we struggled a little bit in off-hours trading here at another key level, 30.87. And now during off-hours, we've pulled back. It looks like we've got a little bit of a support area lining up here at this 30.40 level. So it'll be interesting to see. We've got the regular market session begins here in about 45 minutes. So be interesting to see how price acts around this. Do we stay above 30.40, or do we pull back down? Obviously, if we're looking at breakouts, which we'll do in just a second, if we're looking at breakouts, we'd want to find a key level. Maybe we look even a little bit lower down to 30.25 and see if we break below that 30.30 or 30.25 area, or if we break above 30. This 30.62, 30.65 is kind of set up as a top as well. We'll look at this on another chart here in just a second and place a breakout trade in. But talking about breakouts, those would be the areas to go. It'll be interesting to see also, if we end up pushing up and continuing this shorter term trend turns long again. But I really feel like once this candle closes and new one opens, we're going to see this crossover, and we'll have that downward trend, which would indicate that we might be wanting to look at short opportunities there. But we'll see. We don't want to make any decisions until everything is done here on the chart. So there's a couple key areas to watch, though. Definitely 3,000. Always any whole numbers are typically going to find some levels of support or resistance around them. So as it comes down to, if it does pull down to 3,000, it'll be interesting to see if it breaks below and closes below that, which would give us the opportunity to continue further down, or if it bounces off of there. So we don't know what's going to happen. We just have to wait and see what occurs as it gets down to that level. If it gets there, maybe the market continues to rally today. All signs kind of point to no, with all the stuff going on out there. I'm going to use my nice words. With all the stuff going on in the news, with things being canceled and postponed, and people not going about their normal business day, like the boogeyman is out there. Anyway, crude is in a downward trend. 30-minute has now turned downward trend as well. So for crude, we would be watching for short opportunities. Certainly, we've got some. If we put this on here, we've got some resistance. We seem to have this top level up here about 47.25. Bottom level 46.50 seems to be holding up. It held up on Tuesday. Didn't quite get there yesterday. It's broken down, but it's held up pretty well here over the course of off trading hours this morning as well. So this 46.50, even as low as 46.25 area could certainly be interesting for us as a potential break. But we are, the long-term trend, well, I say long-term, 4-hour trend is down, and 30-minute trend also is confirming the same direction as that. So with that said, we'd want to look for those, we'd potentially want to look for those short positions. Gold, 4-hour is, I don't know if it might still be down actually. Nah, 4 hours up. 4 hours up, and the 30-minute is up. So gold, like I mentioned the other day, it's hard to want to sell it. Even if the intraday does turn a little bit weak, it's hard to want to sell it right now, given all the stuff that's going on in the news and the marketplace. It's typically a little bit of a safe haven where money goes when there's uncertainty in other parts of the market. So, gold continued to have that upward trend. Breakouts, we looked above, if it breaks above the 1660, which has been an area for quite a while where we've seen levels of resistance where it's had trouble breaking 1660. We can see it. I made this really small, but we can see it. It's just bumped. It just keeps hitting that level and rejecting. It broke through it once back here, which was on that gap. Was it last week when the market really just fell off the cliff? We had that gap up on the market open, and that was the only time it broke above 1660. Other than that, that's been a big point of resistance for us. So certainly, again, if we're looking for breakouts, we are in an upward trend. 30-minute and on the 4-hour, we're here in an upward trend. So trading that breakout opportunity would be looking for opportunities above that. So there we go. Over on the Forex side of things, I was watching a couple of potential opportunities. I don't know where let's see if they're still here for us. Looking at the Aussie versus the USD, which isn't typically a very high ranging currency. It typically moves anywhere from 55 to 60 pips for a day. Although it's moved about 38 today. So it's moved 38 for the day. There's typically 55 to 60. So could we potentially get that 20 pips out of it if we were to look for it to break lower here, which is what I was looking at earlier, and I didn't put it on, unfortunately. So we could watch that one, the Aussie versus the yen, the pound versus the USD, just from a range perspective, is interesting. Again, it's moved a little over 70 pips on an average of almost 100. So the likelihood of it moving that 20 pips to get us a potential breakout is good. However, over here on our currency meter, they're both kind of moving in a familiar pattern. They're both long. We're not really seeing divergence between the two. So ultimately we'd want to find currencies that are at least on opposite sides of the currency strength meter in order to pair those together and really find that momentum. So for now, until we get a little bit of movement between maybe the Aussie and the USD, we may have to actually here. Let me just see. Yeah, we may have to wait that out. It's already below the box for me over here anyway. On this one, we're outside of it. I mean, if I change time frames, I can put it back in, but it is below the box. So trading that now would be chasing it a little bit. So rather than chase it, we'll just miss on that one, unless you're looking for something where you could scalp or look for smaller amounts of movement. In the crypto side of things, what is happening in Cryptomania? Let's see here. Just pull this up over here. Go to this screen. Over on crypto, we've been caught in a range for quite a few days now. Big sell-off both in Bitcoin and Ethereum. Both have sold off pretty well, and we've been sitting in this range. We talked about top edge yesterday over here at the 230 on Ethereum. It broke through it. And it's closed above it. So now we've got this top edge setting up over here around 235, 234, 235 area. So if we're looking at breakouts, we'd want to look above 235 and we'd want to look below 220 down here. it seems to have a little bit of momentum, pulling up, but it is hitting its head over here. The trend is still down. We're still on a downward trend. So until that changes, we'd want to continue looking for potential selling opportunities. So, look for areas where you could sell off of that. Bitcoin's rallied just a bit. It hasn't pulled back where it needs to be, but it's rallied. It's broken through that key level of 9,000 and seems to be pushing on for us. So, again, same kind of deal though. We are in a downward trend, and until that trend officially changes, we'd typically look for selling opportunities. Although you could play breakouts and play either direction. If you're a little less risk averse and just say, hey, I'm good with trading either direction. We could certainly do that, and you'd look for your tops over here and break out of the top or break out of the bottom, depending on where these ranges lie. For Bitcoin, for example, we've got this top that's setting up over here at 9170. If it breaks above 9170, we could look long, and then if it breaks back down below 9,000, you could look for short opportunities. So there's certainly, it's within some established key levels right now, and could look for breakouts either direction of those, if you don't want to pick a specific direction. The flip side of it is if you're trading, one way to trade breakouts is to only trade in the direction of a specific trend, and that could either be an intraday trend or a 4-hour trend. It just totally depends on which one you want to give the weight to and how you want to make that play. There's never any one thing that's always going to produce positive results for you. You're going to have wins and losses no matter what you choose. Just pick a specific filter and stick with it. Don't flip-flop and one day say I'm going to trade based on this filter, the next day I'm going to trade on this filter. Pick one and stick to it. That's how you're going to get the consistent results. So anyway, if a market's in a downward trend like this, you might say, well, I only want to take shorts. So in that case, you'd set up your breakout to the short side, and that would only be triggered if it moved back down through that, which would be moving in the direction of the trend. And if it went longer, then you wouldn't be in a trade, and that would be okay. And you wouldn't take a long trade until things crossed over and the market confirmed that it was moving to the long side. Or, like I said, if you're less risk averse, you just simply play both sides of that break and set a buy order and a sell order, and wait for it to break one direction or the other. Understanding when you do that there are going to be days when you lose both sides of that, where it breaks through the top, pulls back, breaks through the bottom, pulls back, and it stays right there in the middle. That's going to happen. So you've got to really think through the process of what's going to work best for you. I can't tell you what works best for you because everyone's personality is individual. So with that said, let's pop over here. Oh, I haven't talked about Crystal in a while. A couple days ago. Continuing to move this, for those of you that weren't here Monday when I talked about it, I pulled some profit out and put it into another auto trading system. So this account came down. I took out $300 and put it into another auto trading bot as a test. So my profit was removed. We're still the Crystal, the bot, is still working, doing what it's supposed to do, and producing those positive results. We're still up for the month, which is great considering the pullback that we've seen over here. I mentioned that the real test I felt like of this would be in a down market, because it seemed to have kind of an accumulation strategy. So the fact that it kept losses to a minimum as the market was falling and is still finishing, well, I guess it's not finishing. It's still moving positive for the month. We're in great shape. So very pleased with that. All right. With that said, let's go over here and have a look at this. So talking a little more about breakouts. I've been utilizing the last couple of days the breakout EA. It's the advanced breakout EA. It's in the members area over there for you. So if you'd like to download it, you certainly can. It's available for MT4 and MT5. It was written, with Forex in mind. So when you put this on a chart for oil or S&P or gold, the lines really come together because they're spaced out by a certain number of pips. And obviously in futures markets we use ticks, and the we're not going out 5 decimals like we are in Forex, and therefore these end up on top of one another. So you just have to take a moment to spread them out to where you can see them on your charts. They all have labels. If you hover over them, they've got little labels here that tell you so that you know what you're doing if you're buying or selling. So anyway, if we're trading a breakout strategy here, this is the S&P. We could look here on a very short term. This is a 30-minute chart. We could look here on a very short term and look for these breakouts, at the top of this range, which is exactly what we talked about just a moment ago. A little bit tighter of a range than I was talking about a moment ago. I was looking across here on my Interactive Brokers account, saying, if we want to look at a little wider range from the key levels, the key 4-hour level is up here at 3087. Right? So if we broke above that, that would be a great breakout. But we could also look shorter term. I used a 15-minute chart. The previous days we could use a 30-minute chart and look for areas where price has been stalling on those 30-minute time frames. So here we can see in off trading hours, price has really come down to this level. It saw it as a point of support, broke through it, it became a point of resistance. So this is a great area to park a buy order. Then from a stop loss perspective, we need to keep in mind what the average trade range is. You can put your stop loss just a fixed number if you like to. There's nothing wrong with that. However, I feel like why not base it on something that is actually meaningful to that instrument that we're trading? If we just say I'm always going to place a 5-tick stop loss, or 5-point stop loss in futures, or a 5-pip stop loss, or 10 pip or 20 pip or whatever it's going to be in Forex, that may be too wide if you've got an instrument that doesn't have a very wide range, or it might be too aggressive if you've got an instrument that either has a very high spread or is very volatile. Again, a 20 pip spread, for example, on the CAD Swiss is pretty wide because it doesn't typically move a lot. But 20 pips on the pound yen is nothing, right? So keep that in mind. I feel like it's a good idea to place your stop loss based on at least the trade range for that instrument that you're trading. One good way to do it that a lot of people like to do is trail it below the previous close, right? You can look at where it was the previous close, or you could just simply say, I've typically got X range on this time frame, and I'm going to place the stop loss there. So we put in our point of entry, put in the stop loss, and then you'd want to pick a level for your take profit. A great way to do that is either look at the key level, or and make sure that is at least a couple of times your initial entry down there if you're not trailing your stops somehow. Then down at the bottom edge of this, we can do the same thing. Bottom edge, we can look over here and say, well, we've got a bottom edge that's kind of established at this 30, 37, 30, 40 area. If we break below that during regular trading hours, I'd want to take the trade, and our average trade range is right about here for this level of bar that we're on. And if it moves down, my next key level that I'm seeing, if we look right across, is over here about 29.90. So I might just say 3,000 just to be on that whole number right there. So it's pretty easy. Once we just move these in and get them set, then we can just simply click and engage the one that we would want to utilize. When it's engaged, it turns blue, so we know it's on. If it's gray, it's off. So with that said, I've got a breakout trade, and I've only engaged, in this example, the short side. The trend, the 4-hour trend is down, and if we feel like we only want to trade with the trend, then in that case we would just engage that one direction. If you're fine with trading both directions and saying, I don't care what the trend is, if it breaks out of this range, I just want to be in a trade, then in that case you would activate both your buy and your sell side. So that's all there is to it from a breakout trading perspective. So just to recap kind of this week, breakout trading, what we're doing is we're looking for an instrument that has hit kind of a place where it's staying within a specific range for an extended period. I would say at least 4 or 5 bars. If it's been in that range for 4 or 5 bars and you're looking 15, 30 minutes, and it's in that range for 4 or 5 bars, great spot. You place your buy stop and sell limit down here on these trades, between that range, and if it breaks below it, you're going to sell. If it breaks above it, you're going to buy. Pretty darn simple. The caveats, the things that you have to consider are, do you want to only trade with the trend? If that's the case, if you answer yes, I only want to trade with the trend, then you would only take, if the instrument's in an upward trend, you would only take buy orders. If the instrument's in a downward trend, you'd only take sell orders. The second part of that is how to identify the trend. You could just simply look at that one time frame and say, if I'm in a downward trend on this specific time frame that I'm trading on, then that's how I identify my trend. Totally fine with that. Or you might say, I'm going to look at trends on multiple time frames and I want to make sure that they're all in agreement. That's fine too. None of those things give you any greater probability. The probability is still the same, right? It just comes down to your execution, your consistency of it. Next is, where do you place your stop loss? We talked about that a little bit. You can either use just a fixed stop loss point, certain number of points or a certain number of pips. That's totally fine. Or base it on something that's quantifiable and say, I'm going to base my stop loss on the average trade range of this instrument. That way, if it breaks above that level, price doesn't typically, it does sometimes. We saw it just the other day, last week, as the market just fell continually off a cliff, right? Price doesn't always do that. More often than not, price finds that key level and it breaks it, and then it comes back, and then it breaks up, and then it comes back, and then it breaks up, and it comes back. And so price is going to ebb and flow, right? If you just use this fixed level, if it's not wide enough, you're going to get, and you may get stopped out anyway. But at least if you're basing it on something that's quantifiable, that's based on how that instrument moves, you have a better opportunity to live through those ebbs and flows. So that's obviously my opinion, but that's I feel like based it on something that's got some quantifiable data behind it about how that instrument moves. And that's pretty much it. The last thing there is I've got tools on the site. You get them for free for MT4 and MT5, either this advanced breakout EA that we're using, or the one that's based on the time frame. Where you just simply have a trade box that pops up at a certain time of day, and you say, hey, if price breaks either direction around this, I'm going to trade it. So there's a couple of ways to go with breakout trades. So that is it. Been here for just about 30 minutes. I think I've hit everything. Someone did send me an email yesterday, and I haven't replied yet. I'll get to that today, asking about, when I first read it, I thought they were asking about averaging into trades, but it actually has to do with an entirely different method of increasing levels of risk per trade based on the wins and losses. I haven't given a lot of consideration yet. That might be something that I can do next week when I'm not actually looking at charts here with you guys. It might be a good discussion to go through risk management and some different ideas around that. So I will get back to that email, but I think that might be a good discussion here for one of these live classes when I'm out on vacation next week. So that's it for now. As always, if you guys have any questions, let me know. Drop me a line via Facebook, or you can always shoot an email in support@makemoneyfromyourlaptop.com, and I am happy to talk to you about stuff. I'm here to help. All right, so that's it. Have a great day. Bye.